Hello, financial investors, and welcome to the channel. My name is Brent, and today we are going to be doing our Monday buys here on the 16th of March 2020. We're going to go ahead and cover some events that took place here on Sunday, rattling the markets, causing stock futures to fall by 5% and being halted. And this is going to be affecting Monday and the upcoming week. And then we're going to go ahead into M1 Finance, go over two stocks I'm planning to buy this week. There's no way to determine where the bottom will be, but I'll definitely be dollar cost averaging as I have been on my way on the market's way up. I'm going to be dollar cost averaging as the market falls that continued $115.38 because that is what my plan is going into the Roth IRA for 2020. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit that red button, subscribe to this channel. We cover the stock market, dividends, and all financial topics there, I suppose. If you do enjoy this video, find it helpful, entertaining, definitely give it a thumbs up. And if you have any comments or questions about this video, the stock market or dividends, drop it below. Also, right now, go down there, let me know, what do you think about this market? How are you taking it? Are you adding more capital in? Are you waiting? Are you sticking to your plan? Are you creating a new plan, adjusting yours? Because this is sort of a different event that hasn't really happened in the past. Every recession is not quite the past recession, and this one was brought on here very quickly by events. So I don't think anybody was prepared, as the last one was a financial crash. This is multiple sectors, multiple institutions are failing just because of what is going on. Small, mid, large cap companies are having employees working from home, rushing to get these situations under wraps. So, with that said, let's go ahead and get into some of the information that was posted here earlier in the day. So, over on my Facebook page, I posted a snap from Instagram, kind of going into how the Dow and other indexes had plunged by over 1,000 points as the Feds cut interest rates to zero. Now, I said this a couple of weeks ago. I was expecting the Fed to come out and cut rates to 0.25%. I think that is as low as they're going to be going. I don't believe we're going to go into negative rates. That would be very harmful. We've already seen what has gone on over in Japan and I believe some European countries as well. Having negative rates has caused Japan to stall out for the past 30 years. There really hasn't been any sort of growth there, and I don't want to see that happen here in the market. So stock futures for all the indexes fell by over 5%. They've actually been halted here in the after hours. They will continue on Monday into the negative, more than likely. If you were to ask me, 51% chance that the market will rebound slightly or continue going lower. 51%, I would say, is going to continue lower. There's no positive news in sight here in the short term as far as positivity, I suppose. There's too many unknowns of how this will affect us in the short term and even in the long term. So until more knowns become known, it's all unknown, and the market does not like that, and we're going to continue trending lower. And there's a lot of ways to take profits during this time. It is risky, and I won't really go into it all, but there's a lot of different ways you can kind of go into it, discuss it. But we are going to be covering a couple posts. So the first one here, I posted them over on my page. The first one here that we're going to be covering is basically just the Federal Reserve coming out on about 6 p.m. Eastern time. They came out, Powell started broadcasting. You could hear him speak, discussing the emergency move on Sunday as the Federal Reserve announced that it's dropping its benchmark interest rate from 1.25 to now basically zero, but it's 0.25. It was a 1% deduction from 1.25, putting us at 0.25%. So they also announced that they're going to be doing their fourth qualitative easing program. This is essentially their fourth or fifth. I know they've been kind of going at this these past few months. They've been kind of pushing more and more money into the market, buying up assets and stuff. So this program is a QE program that'll have $700 billion worth of assets purchased, and it's just kind of prop up the treasuries and mortgage-backed securities. So very crazy, and the Dow here is plunging in the after hours by 900 points. So both of these posts, or this post here is in the Facebook page here. So this is post one. The second post, is up at the top here. You can kind of see what the headlines are, but the reasoning for the cuts. Last week, the Fed came out, cut it by 0.5%. Now, just a week later, we're cutting it by an additional 1%. They are also not going to be meeting this week. They were supposed to be meet on Wednesday, and investors are percentaging in a 75% chance, 80% chance, 90% chance that the Fed will continue to cut rates. Well, they didn't wait until Wednesday. They went ahead and cut it today, knowing that this cut is designed to prevent any kind of credit crunch in the financial market disruption that occurred the last time the Fed had cut the rates all the way down to the bottom. So they're kind of going at this here now versus waiting for that disruption because they've already kind of learned from the past and they don't want to repeat it. So they're kind of going about this way. Fed has already cut their rates so far, so fast these past few months that this whole rate cut and quantitative easing, it may not work as it had in the past. When we started cutting rates during the recession, I believe rates were around 5%. We had quite a bit of room in order to cut rates down to zero. Here, we don't have much wiggle room in order to cut rates. So I don't know what other kind of plans they're coming out with, but it'll be interesting to see how and what we do to kind of make it through this little area and bump in the road. So the U.S. stock market tumbled into a bear market this past week, with all indexes closing below 20%, reaching as low as almost 30% into the negative. Friday, the markets did recover 10%, putting it roughly down about 20%, but you can more than likely see that this market here in the future will be swaying by thousands of percent points at a time into the future. So there's definitely a lot of information here. I'm not going to go into it all as it does take a lot of time to go through. So that is why I posted these here over on the Facebook page. If I can, I'll go ahead and copy these into the comment section of this video. So look for a pinned comment and I'll have those pinned into the comment section. Okay, with that said, let's take a look at the M1 Finance account and take a look at two stocks I'm planning to buy here on Monday. So I can't plan the bottom. All I can do is continue my plan. And my plan initially was to max out my Roth IRA every single year with that new equity of $6,000. And every week I add $115.35 over 52 weeks, maxes that out at $6,000. So here we are again. We deposited $115.35. We had some dividends last week. So if we go into our activity tab, last week was the 9th through the 13th. So we had Chevron paying out $6.04, Johnson & Johnson $5.85, 3M $6.72, Walgreens $5.56, and Main Street Capital 80 cents. Main Street Capital is a real estate investment trust and it pays out monthly. So I've recently been buying to this one. So every month you'll probably see Main Street Capital beginning to steadily increase payouts every month as I do buy back more shares. I am not buying Main Street Capital today. That has been my focus these past 2 weeks, but I have two new opportunities in my portfolio, so I'm going to be taking advantage of buying them currently, and if they continue to fall into the future, I'll continue to buy these as these are two dividend aristocrats. So here on this past week, I'm going to go ahead and add up these dividends. So 604 plus 585 plus 672 plus 556 plus zero point 0.8 is last week I made nearly $25 in dividends. Now these dividends are buying back more shares here in this new week. I'm able to reinvest $25 of dividends back into my portfolio, purchasing more shares. And while this market is trending lower, this $25 is much stronger. This $25 may have only bought me, of a $100 stock, it would only buy me a quarter of a share. Say now that the market's down 20-30%, that a quarter of a share, I am now able to purchase maybe 1/3 of a complete share. So your buying power definitely gets stronger as this market falls further and further into the red. And eventually with time, once this recession and crash does pass, these companies that remain fundamentally strong during this downturn will come back up, and they'll raise their earnings, they'll raise their revenue, and they'll continue to pay out shareholders during this time. Normally, if you invest in strong companies with strong financial fundamentals And I've kind of discussed in the past a few companies that I will not be diving into, as I've seen other investors dive into, such as Ford, General Electric, General Motors, ExxonMobil. Those are just companies that I've looked at the fundamentals. They don't go along with my plan, so I have not added into those. So let's go back to the portfolio, and we can see here that we are negative in the portfolio. We have not been negative for quite a while. If we look at the overall performance, there was a time back when I initially started this portfolio with $5,500 back in January of 2018. That was at the market highs. During this time frame, the market dipped in February and fell by, I believe, 10% or so, putting me down in the portfolio into the red by around 10%. As of that time, there was a portion around November, October period where the market fell very hard, losing almost, I believe, 20% in December of 2018. That is when I began to deploy a lot of my capital in order to max out the Roth IRA, and that's why you see the portfolio move higher even though the rest of the market moved lower. This is just equity getting pushed into the market. Now, throughout that time, I've been steadily adding $115.38 during this time frame, and we've had a nice steady increase there, just in equity building up. And now here we are today. It is the 16th of March 2020. The portfolio now sits at negative 2.51%. We have now market gains of negative $1,191.38, and this portfolio has generated dividends of $914.64. Now, that $914.64 that this portfolio has created, that has not gone anywhere. That has been reinvested into this portfolio. It is working hard right now, paying out more dividends, buying back more shares, increasing my total dividend income, because you're going to see the dividend income in this portfolio begin to compound at a much faster rate than it has been, just due to the correction that has taken place. We're now able to buy stocks at prices that have not been seen as early as 2017. Some companies are getting erased back even multiple years back to 2015. So always look at the companies, at the fundamentals. How much of a discount are you getting? Just compared to 3 weeks ago when the stock market was trading at all-time highs. So over the past month, this portfolio has lost around $3,665.02, and this is just one of multiple portfolios. There has been a pretty good hit as far as equity goes. 1 month, we're down 17.21%, not doing as bad as the indexes. I believe the indexes are down around 20 or so percent. So I'm not scared in any way. I think that this is just a buying opportunity. We can see that we've had positions now in the red that we have not had in the red in quite a while. There's still a few positions that are actually moving positive over this past month, even though the rest of the market has been tumbling from anywhere from 2.84% all the way down to 42.28%. Main Street Capital was not a company I was able to invest in just a few weeks ago. This one was trading at all-time highs, up 42% from where it is now. Now, because of this recent hiccup, these financials are getting destroyed. Eaton Vance, Simon Property Group, Main Street Capital, Las Vegas Sands in the Las Vegas in the gambling and such industry, real estate investment trust financials. They are getting wrecked here in the short term, and it just creates buying opportunities. So there is our 1 month performance, down 17.21 this last week. The market, I believe, lost around 10%, somewhere within there, so I'm down 8.81%. About half of the total month was lost just in that last week here. And then the 1 day performance, last Friday we were positive by 8.9%, or roughly $1,500 just in a single day. It's amazing that the market is swinging by these large amounts. So this is a tiny portfolio of $17,000. So imagine these other portfolios that are out there with $100,000 or $1,000,000. I saw one investor who had recently became it's an accredited investor. He had finally hit that $1 million mark here just about a month ago with his portfolio. He was super excited. He was kind of discussing this, saying that, he finally hit his goal, his mark of $1 million, and became an accredited investor. And now here we are into a downturn, down 20, 30%. So it's basically his portfolio went from 1 million to 800,000 hit, but he is a dividend investor. So his dividends that are getting paid out every month of around I believe it was like $2,000 to $4,000 are just dividends getting paid out. These dividends during this time, he's reinvesting all those dividends back in, and $400 or $4,000 of dividends getting reinvested back into your portfolio. And say you're buying back shares at a 4% yield, you're increasing your dividend income every single month by those payouts by roughly $160. So if this thing takes place over a course of a year, or generally the stock market is generally down, I believe it's anywhere from what's it? It's a year and a half to 2 years as far as like downturns. Normal recessions sometimes start showing recovery after a year and a half or 2 years. We'll just say 2 years, and that is 24 months. So it's 160 times 24. He's basically increasing his dividend income by 3,840, or roughly the $160 per month. Just his, and that's compounding. So $160 every month, and then those new shares continue to produce income into the future. So looking at that last dollar amount, that's going to be much different, just because all those dividends are buying back more shares at a much deeper discount very quickly. Okay, so in this past week, we did have a new opportunity that kind of came into the portfolio, and we're going to be focusing on the two companies that I'm planning to buy here on Monday. Number one is McDonald's. McDonald's lost 10.93%. It was one that I initially added to my portfolio not too long ago. It had very little equity. It shot up to about 30-40% up in the portfolio, and I had not been able to invest in it. Now, with this downturn, McDonald's is down 10.93% in the past week. If I look at it overall, where is this at overall? It is right here. It is showing down 17.67%. So in my portfolio, it's down 17% from when I thought it was a great investment. I still think McDonald's is a great investment, and I want to buy back more shares, and now I'm getting a deeper discount from where I thought it was a good buy. So McDonald's is going to be my first buy this week. McDonald's here, obviously they own a lot of real estate throughout the world, and then they lease out their real estate in order for people to rent from them and have the logo, the branch. They run their own business as an owner, and then just rented it from McDonald's. So can't think of the word, but they own a lot of real estate throughout the world, and they just kind of rent it out to those who want to use their buildings in order to run McDonald's. So currently it offers nearly a 3% starting yield. They pay out $5 per share every single year. Break that up into quarterly payouts. That would be dollars and some change per share each quarter. They have a very low ratio of 60%, meaning that they have some wiggle room in there, that if earnings do fall into during this downturn, their payout ratio may rise, but they will not cut their dividend, and they have very good history of growing and paying out dividends during these past recessions here in 2008, in 2000, 2002, and 92. I think there was another recession that took place. So in the past 43 years, McDonald's has continued to not only pay its dividend, but grow it year after year after year. And that is what I am looking for here in these little sort of hiccups. I definitely want to continue buying into these. And this one here does not go ex-dividend until around May 31st of 2020. It recently went ex-dividend here in February 28th, and it recently increased its dividend from $1.16 per share to now $1.25 per share each quarter. So it is definitely a company here that I have no issues with buying into the red and continuing to average down. The second one here that I'm planning to buy is not too much into the red. It's actually very little into the red. It shows here as being positive by 13.28%, and this is AT&T. And the only reason here that it's showing it's positive by 13.28% is because M1 Finance collapses the market returns with the earned dividend. So AT&T, while I have held it, has generated $72.66. But that's not what I'm looking at. I am looking at the current market gain. So currently I am negative in this stock. Plus tomorrow I believe that with the Fed cut, with what is kind of going on right now in the market's going to start lower. It's going to pull the rest of the market lower with it, meaning that all these other companies out there are also going to probably hit negative, and we may see AT&T actually open up by maybe 5% lower, or maybe in the $27 range. I would really like to buy AT&T down into the $25, $27 range. Maybe I can get it within there. Right here at 34.47, I think it's still a little high, but it's a lower price than where I initially bought it. And with it opening potentially lower here on Monday, I'm going to be slowly adding a little bit more equity into this position because I think it's a great company. And I don't know of any other companies. I mean, I do have quite a bit here into the red. These are all the red positions here, right here at the bottom. There's a few of these that are considered dividend aristocrats. Here's AT&T, very little into the red. We have ABM Industries. This is actually offering me a slightly lower or better discount at 0.31. These are not much into the red. I just feel I could definitely buy a little bit. I was actually looking at Johnson and Johnson down 1.89%. But I'd like to get AT&T up into the $800, $900 mark, and I think that's just kind of a nice little buy right now. I had also looked at Lancaster Colony Corp. This is it's a food company. They have different food-related items. It's a food major diversified company, and I am planning to buy a little bit more of them as well. You can see here I don't have much equity into them, $130. But I'd like to see them kind of fall. And AT&T for me right now, even though it's not too much into the red, it definitely has some strong fundamentals behind it. And if Lancaster and a few other companies continue to fall, I will definitely be adding into these other ones on their way down. So those are the two companies here I am planning to buy on Monday. As we cannot plan the bottom, all I can do is sort of buy and stick to my plan. And when the market does recover, these companies should recover as well. So 140.35 divided by 2, that means I'm going to be investing roughly $70.17 into each one of these. So we're going to find AT&T right here and buy and sell. We are going to be buying, and we're going to go $70.17 and continue and confirm the buy. And then we're going to go ahead and move down to McDonald's now, which is actually further down in the portfolio, actually in the red here. Select it and punch in $70.18, leaving us with $18 of available, meaning that we're just investing 100% of our cash in this account. I'm adding cash into this account on a weekly basis, so I always want to have it invested. There's no point not having it invested because I'm not waiting for any sort of bottom. By having it invested, yes, my volatility, my equity moves up and down quite a bit, but in this account, I'm generating income in the future that will pay out dividends, will buy back more shares, which will increase my income. And at 15.5, when this portfolio will reach its maturity, I would like to have this portfolio generating anywhere from $1,000 to $2,000, along with my portfolio that is generating dividends of $1,000 to $2,000, along with any other investments out there that are paying us. So they're all going to be working together in order for us to be reaching our retirement goal. So that is basically it for this video. If you guys did enjoy this video and find it helpful, definitely give this video a thumbs up. If you have any comments or questions going over anything that we went over in today's video, the stock market, dividends, and such, definitely let me know in the comment section below. I would really like to hear from you. What do you think about this market? How much further do you think that we have? 50% chance. Obviously I don't think we're going to be recovering here anytime soon. I think there's way too many unknowns in the market. And I think it's just kind of interesting to kind of just watch it. Don't be reacting sporadically. Have a plan. Don't throw or sell anything without knowing what you're doing, because you may regret it later if you're making rash decision. So that is going to be it. My voice is kind of going in and out. It's 1:30 in the morning, so I do need to get rest. So that is going to be it for today's video. Thank you all for tuning in. I will see you next time. Have a great day. Bye.